Hello everyone, Real Estate Ninja here. I hope you're doing well. To say that I'm excited to make this video is an understatement. Mortgage rates are falling and I just had an amazing cup of coffee with a subscriber and I can't wait to tell you the story about that cup of coffee. And at the end of this video, as we talk about mortgage rates falling, because there are big changes happening. And if you understand these changes and you pivot to do something a little different, you are going to make a lot of money because you're going to save a lot of money. Now, as I start out this video, I want you to say yes if you agree that saving money is the same as making money. I say that because I used to get made fun of all the time when I drove a tiny Honda Civic, an old 1998 Honda Civic. It looked all beat up. When I used to drive to the fire station. And when I went to the fire station, I talked about how I'm saving money by driving this car as opposed to my big F-350 truck, which was still like a 2002. But I was telling them I was making money by driving that car to work. It overpaid for itself, the cost of the car, the insurance and everything in the fuel savings. I needed my big truck. And I know this is going to sound crazy as we're going to talk about mortgage rates and how mortgage rates are falling right now. But I want you to understand this. I still needed my truck when I was flipping properties, buying and selling properties, fixing them up, rehabbing them, all that kind of stuff. I needed my big truck to be able to take big loads of lumber, a trailer, things like that. So by buying this other car, I was saving money. So type yes down below if you believe that saving money is making money. And then I'm going to tell you this news story. We're going to talk about mortgage rates. I'm going to show you how to save some money right now. And we're going to dive even deeper. Before I start this story, I've never done this before. We just launched a pre-filming discount. It will never be this price again for Investor Mortgage Pro. This is if you've ever wanted to buy rentals and you want to learn how to use mortgages to save thousands of dollars and then later on subsequently tens of thousands of dollars in the first couple of years in interest, and you want to finance anything from a duplex or actually even a single family home all the way to 100 units, 200 units. This course covers everything from small loans to big, massive commercial loans. 87% off, link down below. As soon as the lessons are finished, this course will never be this much again. It's 87% off right now, okay? The story is out of the street. It's entitled, Mortgage Rates Just Had a Huge Drop. Let's see what they have to say. We're going to talk about it, and then I need your feedback after this. Buying a house requires thinking about 4 key measures: the house, the neighborhood, the price of the property, and, of course, the rate on the mortgage. In the past few weeks, mortgage rates have started to fall to levels low enough that buyers might want to start watching and making plans. As of July 12th, lenders were quoting rates on 30-year mortgages at under 7%, according to both Freddie Mac and Mortgage News Daily. I'm going to get to why they're advertising this, but it's not what you see, okay? We're going to save you a ton of money right now. Freddie Mac is one of the biggest providers of capital to housing lenders. Mortgage News Daily is a news site that tracks housing finance. If the Federal Reserve cuts its key rate in September, as it is now expected, there's a good chance rates will move to 6%, maybe lower. You want lower rates, it says. When rates fall, the principal and interest each month becomes more affordable. Last October, the mortgage rates jumped to 8%. A $300,000 loan would require a monthly payment of $2,200. Taxes and insurance are completely separate from that, okay? All right, let's start saving you money. Hold on. If you like saving money, type 1. Oh, and do me a favor. Is anyone in the audience right now looking to buy a house? I want you to type that in, refinance a house, or buy a rental. I want to know what you want to do right now. We're going to save you all money. All right, here we go. So I had lunch, or I made a coffee this morning with a subscriber that had purchased, is in the middle of purchasing a home. And they took the mortgage master course and they're already getting everything in order and seeing how they're going to be able to save money. They brought their estimate to me. They've had a little bit of issues in escrow, and I looked at and they asked, what is this origination fee? What is this fee? It's like $8,200. It's for points, right? And what I explained to them is right now, almost all banks are going to require some type of charge. They're going to charge you for points. This is money that it just goes away. You never get it again, right? You never get it back. You are paying the bank to give you a loan. Okay. The reason why this happens, this doesn't always happen in an economic cycle. When rates are super low, they don't charge points. by and large, depending on your credit score. But right now they're hitting everybody with points, and these are negotiable. I want you to understand through a negotiation process, whether it be for a rental property or for your first time home, it's negotiable. And one of the easiest negotiating rates is going and getting 3 quotes, right? 3 loan quotes, loan estimates, or whatever fee estimates, depending on where you are in the cycle of getting a mortgage. You go and get 3, and you'll find that some lenders want your business so bad that they will charge you barely any, sometimes even no points, because they want your type, you as a client, okay? Because you have a certain credit score, you have a certain type of income, and they want your business, okay? When you go get 3 and you compare them all, that's saving you a lot of money. If someone wants to charge you 2 points, let's say for a $400,000 loan, that's 2 points would be $8,000. You'd never get that again. It's just you paid the bank, right? So what if another bank said, "Oh, we'll only charge you 1 point." Now you're saving $4,000. Or what if it's 0 points? You're saving $8,000. If you would have just went with the first company and not gotten any of these other estimates, right? Well, they charge this when they know the economy is turning downward and that the Federal Reserve and the bond market, the rates are going to start dropping. This is why. When a lender loans you money for a mortgage, they have to borrow that money from someone. And then they want to sell that loan as fast as possible and retain the rights of servicing. All right? Type 2 if everyone's understanding this right now so far. Type 3 if you don't get it, okay? I want to make sure everyone understands this. You're going to save you a lot of money. When banks sell off your loan to another loan originator and you turn around and refinance within 6 months, in their contract, and it does vary, within their contract with the other lending institution, they have to pay a fine. So what they're doing is, when they know that rates are high and they're about to dip, they start to charge points, because they know that the likelihood, if rates dip and you still have enough equity in your home to refinance at a lower rate, you're going to do it, and they're going to be fined, okay? And they don't want to be in a position where they lose money, so they charge points. If you don't refinance, they get to keep that money forever, all right? Now, rates are going to dip a little bit coming up soon, even more than what they are now. And what they're telling you in this news story, and I'll just reiterate what they said here, and they'll explain it. It said mortgage rates have a huge drop, and it says, here we go. Sorry. As of July 12th, lenders were quoting rates on 30-year mortgages at under 7%, according to Freddie Mac and Mortgage News Daily. That all comes with a cost of high points. So all they're quoting you is the rate, and that's not good, okay? Because people look at the rate and they get all excited. But what happens is the broker always sits there and goes, we could give you a lower rate if you want. You could buy down the rate. And people get even more excited about that. But you don't know what's coming next in this cycle. And so what people need to do is go get those multiple quotes and find a lender. You got to build your credit and do all that kind of stuff. But it's a big deal. Now with rental properties, it's even a bigger deal, because rental properties, when the bank knows that you're borrowing money for the rental, the costs go up exponentially in both the rate, fees, and things like that. And so by knowing this ahead of time, you could save a ton of money. And type yes or say I do if you like saving a lot of money. Now, what's coming next in this cycle? I've already said before, especially on my other channel, The Economic Ninja, I've said that the Fed is going to pivot and do something that it's done 4 times before since 1972, and they're about to lower rates just a little bit. This is a nothing burger, because what's going to happen is it's going to increase inflation and rates are going to skyrocket. Now, is this a bad time to buy a house? No, it's not. I know it sounds crazy. I always say there's never a bad time to buy a house as long as you're buying a house for yourself and you're going to be there for a long time. You believe your job is going to be solid and you've locked in a fixed rate and your payment is at or lower than rent. There's not a problem. Even if the price of the home drops, which it will, it's going to come, right? And people try and time this all the time, and that's not the right way to do it. And your house becomes worth less, you're still good, because rents stay strong. In hard times when people are losing homes, they now need rentals. It creates a demand for rentals. Right now, there's not as much of a demand for rentals like there was during COVID. And so rents actually go higher. Rents right now are actually going lower nationally. We're seeing rent deals all across the country. That's going to go up. So it's going to change. So what happens is, if you have a fixed rate and your home price goes down, it's okay. As long as your payment, that's your cost of doing business. You have to live somewhere, right? When you look at it that way and you're at a good place and your payments are low, manageable, you can breathe easy. Now you can go and attack the rental market. And that's the most important part. Here, let me do this. Say hashtag rental or income property if you are looking to buy rentals during this next crash. I just want to see how many people are looking to buy rentals. When we see the market pivot and rates start to fall, rates will only fall on a real term, like an actual rate drop from the Federal Reserve when things are really bad. So you need to be prepared. You need your credit score all set up. You need to have a thick, what's known in the industry, credit industry, a thick binder. You need to be able to, thick file. You need to have it set up to where when you walk in, as everything's falling, see, there's a lot of people wanting to buy rentals down here in the comment section. You're able to scoop up those rentals with no points. And then especially if you get into commercial mortgages, I want you walking into CMBS loans and taking over CMBS. I know it sounds crazy. They're actually really easy to take over. They're actually built in a way that banks want you to take them over easily, assume them. Because what happens is that creates no friction in the system, and it reduces the amount of foreclosures on big multifamily properties. And that's what I go over in this course. If you guys want it, it's 87% off. It's the pre-filming discount. It will never, ever be this low again, okay? That's if you want to buy one rental or if you want to buy 100. This is a big deal. You need to have the knowledge to be able to go out and crush it and save money. And saving money right now is just as good as making money right now. And then once you're saving money in this process, you're going to take that knowledge and you're going to start buying property after property after property during this downturn. Because when interest rates skyrocket on this next cycle, they're going to go down a little bit right for the election, and then they're going to skyrocket. They're going to skyrocket. If you want to save this video, download it so you can remember the ninja said this. It's going to happen. In the next couple of years, rates are going to be much higher unless we have an absolute collapse of the economy. That could happen. And then the Fed lowers rates, drops rates specifically. But if they do drop rates before inflation is under control and people that still can go and borrow money against assets to go and freely spend it on cars, vacations, all that kind of stuff, you're going to see a massive explosion in inflation, which then yet once more will take interest rates higher. So you see, there is only one way we get out of higher inflation, and two different ways that we see much higher rates. Okay, only 1 out of 3 chance right now that we've got to see lower rates and lower inflation. So the odds are stacked against you that rates are going higher. So wouldn't you want to be ready for that? That's my question to you. I don't want you sitting on the sidelines. This is an exciting time to be alive. If you want to check out that course, it'll never be this price again. I can guarantee it. It's too valuable. It's 87% off. We've just sent the last 6 videos to the editor. You've seen probably 3/4 of the course is already done. It's the Investor Mortgage Pro course. Check out the link below. I hope you have a great day. The Real Estate Ninja is out.